Well, welcome to this webinar on relocation to Switzerland. Across the next 60 minutes, I'm joined by a panel of leading experts for every piece of information that a high net worth client considering a move to Switzerland should be thinking about. I'm going to come to them shortly for a brief introduction before we get into our content, but just to advise, the chat is open, the Q&A is open. We love to hear from the audience with any questions they have, and I will seek to bring those questions out immediately for our expert speakers to answer to get your points across. So with me today, I'd like to welcome 4 esteemed guests. I'm going to come to each of them now for a brief introduction on their area of expertise, starting with Sebastien Collart. Welcome, Sebastien. Be great to hear a little bit more about your expertise and practice.
Yes, good afternoon, David. Thank you very much. So my name is Sebastien Collart. I'm one of the founding partners of 100 Legal Law Firm in Geneva. We have offices in Switzerland and in Dubai. I'm duly qualified as a lawyer in Switzerland and as a solicitor in England and Wales. I also hold dual nationalities. I'm Swiss and British. And one of my other hats, I would say, in addition to legal services, is I'm co-chair of the International Relations Committee within the Geneva Bar Association. And that brings me to tackle any bilateral relationship between Geneva and London, or broadly between Switzerland and the UK.
Fantastic. Well, great to have you with us today. Look forward to speaking in a moment. Stefan Joris, welcome today. Be great to hear more about your practice, sir.
Thank you, David. Good afternoon, everyone. My name is Stefan Joris. I'm a tax lawyer based in Geneva. I'm specialized in Swiss and international taxation for individual and corporate groups. I have run my own law firm for 11 years. And like I said, I advise individual and corporate entities on wealth and estate planning, as well as in their challenging with the tax authority. And also I assist some individual to relocate to Switzerland.
Fantastic. Well, great to have you with us. Daniel Udry, be great to hear a little bit more about how you help high net worth clients in Switzerland.
Thank you so much, David. Good afternoon, everyone. My name is Daniel Udry. I'm a founding partner of the law firm 100 Legal, based primarily in Geneva, in the Swiss Alps, in Sion, as well as in Dubai. And I'm specialized in real estate and in transactions.
Wonderful. We'll look forward to coming to those really important real estate questions later on, Daniel. But last but not least, Vincent Rodouy. Vincent, great to see you.
Good afternoon, David. Good morning, good afternoon, good evening, and thanks to all the attendees for giving us some of your time today. So I'm like Seb, I'm a Swiss and British passport holder. I've been working for 34 years in the financial industry. I've worked 19 years at Credit Suisse, 4 years at Lombardier, and 9 years at Swiss Partners. I'm one of the co-founders of Liovest Partners in Switzerland, and I'm also their senior relationship manager. So Liovest is what we are, is a multifamily office independent asset manager. We've set up the shop on the 1st of January 2026, and we have grown over the last 24 months from scratch to close to 2 billion Swiss francs today, which makes us one of the, I would say, fastest growing independent asset manager multifamily office in Switzerland. And I've been personally covering the high net worth individual, ultra high net worth individual, predominantly based in the UK, Ireland, or any Anglo-Saxon who has a UK connection for the past 25 years. And who are based in Switzerland, Italy, France, Spain, Portugal, Lithuania, and Israel. And relocation has been very much keeping us busy over the last 3 years.
Fantastic. So, Sebastien, just to come to you on the international framework, we have the Berne Financial Services Agreement, a groundbreaking agreement between UK and Switzerland. Perhaps you could give us a backdrop. You know, what problem does it solve for high net worths in the UK or financial services business looking at the Swiss market?
Absolutely. Before we jump into the specifics of the Berne Financial Services Agreement, the BFSA, I think it's important to give a bit of context relating to Swiss and UK relationships at the moment. Both countries are islands in their own right, geographically speaking, in particular regarding the European Union, right? So they're outside of the European Union. We know that Brexit happened. And so this bilateral agreement is in the context of the strengthening of this this partnership on many aspects, and in particular financial services. London is one of the major financial hubs in the world. Switzerland is as well, in particular Geneva with the private banking scene, right? And so the UK and Switzerland have, for over 10 years now, within this context, decided to strengthen their relationships, in particular in financial services. So we've got formidable tools that already exist in terms of bilateral relationships. We've got the RPQ agreement, which is the mutual recognition of professional qualifications. This allows and facilitates the provision of services between both nations in certain industries. You know that the future trade agreement is currently being discussed. And this should be a groundbreaking agreement as well, and should cover all aspects of services, including legal services and in particular financial services. And then now we've got the Berne Financial Services Agreement, the BFSA. Now it's not revolutionary, but it's unique, and it's the first of its kind in terms of a mutual recognition agreement, in the sense that, I mean, what has Britain and Switzerland said? Basically, they said that, well, we trust each other's financial regulation. We both protect our clients and our consumers. So what we're going to do is we're going to remove any barrier for cross-border financial services that our various professionals could provide. Now, there are 5 key industries and areas that are covered. You've got banking, you've got investment services, asset management, insurance, and financial market infrastructures, right? So mutually recognizing each other's legal regulation and supervisory environment, that's unique in itself. It's the first of its kind, as I said before, and it introduces principle of deference in certain aspects. For instance, UK insurers who want to penetrate the Swiss market, basically what it does now, it eliminates duplication. So deference, the UK insurer only has to rely on UK rules. And so you do not need to comply with Swiss rules or supervision, because both countries have recognized the rules of the host country, if you may. So that's groundbreaking in itself, I would say. And so what it does solve, it provides certainty, because both countries now know what the rules are in each other countries. It provides continuity. A UK client, high net worth UK client, moving to Switzerland for any reason, tax reasons, quality of life, whatever, now can maintain his relationship with his UK advisor. Beforehand, that could create friction. It would be complicated. What do you do? Okay, you've built, so in our jobs, all our jobs are built on trust. So you've built relationships with clients for 15 years. That client moves over to Switzerland. What do? Do you continue to advise him? Are you in a gray zone? Do you need to comply with local regulation and supervisory rules? That might create uncertainty. We don't like uncertainty. So now that relationship can continue.
So from a practical perspective, the high net worth relocator gets that benefit of the continuity of relationships. But I guess commercially, the financial services industry in the UK also can expand perhaps their business potentially in Switzerland, and seek new opportunities there, as you say, with more clarity about their regulatory status and without additional burden. Are you seeing that?
You do see that. You do see that indeed, because it is a massive opportunity. But there's one thing that we must stress is the limitation as well, because there are limitations with the BFSA. It doesn't apply to everyone, right? So it applies to wholesale professional clients. If you're a retail client with 50,000 quid to invest, it's not for you. So we're talking about professional clients, so banks, pension funds, insurance companies. We're talking about institutional clients, high net worth individuals. So the thresholds, there are a few gray zones in terms of interpretation, but we're talking about minimum 2 million sterling, for instance, for UK clients. So yeah, there are opportunities.
Prior to the
Absolutely.
agreements for wealth managers, for example, prior to this agreement, what's it unlocked for them?
Well, before the BFSA, I'd say the rule. I mean, banking and asset management, it was permitted. You could see it, right? I mean, Switzerland's pretty liberal in that sense. However, it could create some friction for the uncertainties of the grey zones that I mentioned beforehand. You'd probably, some of these banks or asset managers would have extra costs because of duplication, because you needed to comply with the Swiss rules. So you need individual advisory registration with the Swiss regulator FINMA. So what the BFSA has done now, it's reduced this because there is mutual recognition. So you've reduced and you've eliminated duplication. What does that do? The costs that you save on advisory, on setting this up, all the administrative work, well, you can use this money to scale up.
Mm. And in terms of the agreement's relatively new, have the grey area in terms of the procedure of getting it recognised and into law, do grey areas still exist? Are we at a point of clarity for organisations?
Well, there are few grey areas. I mean, yeah, it's in effect since 1st of January, right? So some people don't even know it exists yet, for instance. But there are a few grey areas in terms of operational and implementation elements, such as client classification. How do you classify a high net worth individual or client in the UK and in Switzerland? You need to uniform. I mean, these rules and evidence. Delegation. If you delegate portfolio management, for instance, from the UK to a Swiss player, and suddenly the client's not happy with the Swiss advisor, who's responsible? How do you tackle that situation? So things like that. But it's early days, and I mean, we can expect regular updates from the FCA and FINMA, which are both countries' regulators. So it should be clarified over the course of the next few weeks, months.
Thanks. And I mean, beyond the UK, are other agreements in the pipeline? Where do you see other opportunities of similar style for which might be relevant to relocators coming in?
Well, it's clear that the BFSA is clear. It's a template, right? It's a blueprint for future agreements, and as I said, it's unique. It's the first of its kind. So if this functions, and I believe it will, because it will create traction, it does give birth to further opportunities, and it facilitates the provision of services. If this works, it can be duplicated elsewhere. And I know Switzerland is in discussion, obviously, with the European Union. I think Canada's in the pipeline. Singapore and Hong Kong might be candidates. So I think we can expect similar agreements being signed in the near future, probably.
And key message for two different audiences, I suppose, the high net worth relocators is this agreement might help your relocation and help the smoothness of your service provision with existing providers. And for wealth managers or other professionals, they can take professional advice to see if they can expand their market. I mean, what are you talking to those different audiences about at the moment?
Well, for the high net worth individuals, I'd reassure them by saying you can continue your relationship with your current advisor that is in the UK, because it facilitates his provision of services. He can come and visit you in Switzerland. He can continue to advise. What it does, and we must stress this, it doesn't solve any tax issues. It's not a tax agreement. It's a service agreement. So the tax that you'd still need a Swiss tax advisor, right? And for the UK advisors, the professionals providing this, well, it facilitates the cross-border provision of the services. So you once again, continuity with your clients, clarity, regulation. You rely on your regulated environment and your regulator, which you have developed a relationship with.
Fantastic. Well, thank you for getting us underway, Sebastien. The chat is open.
Thank
if you
you.
have questions for Sebastien in this field, do drop them in the chat and I will bring him straight back on. But moving on to tax planning, Stefan Juris. Stefan, welcome. the choice between lump sum and ordinary taxation is the first major decision for high net worth clients. Can you just give us the backdrop for that type of choice?
Yes, thank you, David. We can choose between ordinary tax regime and lump sum taxation only if you are a foreign citizen, you relocate in Switzerland for the first time or after an absence of 10 years, and if you do not carry out a gainful activity in Switzerland. So if these three requirements are met, you have the choice between ordinary taxation and lump sum tax regime. So just the framework of the ordinary taxation. Under ordinary taxation, you will be subject to an unlimited tax liability at federal, cantonal, and communal municipality level, and you will have to fulfill a tax return every year where you need to put your worldwide assets, income, and wealth. You will be taxed on the income tax. We have income tax and a wealth tax. The income tax is levied on the income realized during the year, and the wealth tax actually is a picture of your wealth. The taxable basis is a picture of your wealth on December 31st of each year. If you are married, you will be taxed together with your wife, and the income and wealth will be combined. And this is the same for the children of under than 18 years old. You have some exemption. For example, for asset and income originated from foreign businesses or foreign real estate. This will not be included in the taxable basis. However, you will have to declare this element because the tax rate is progressive in Switzerland for income as well as wealth tax. This is progressive, so you have to declare these foreign real estate, for example, in order to the determination of the tax rate. But this foreign real estate will not be included in the taxable basis. So this is the exemption for the tax rate. We are a small country with 26 cantons, and we have significant differences between each canton for the rate, income or wealth tax. I just share a chart. Is it okay? Do you see? No, here, yes. I think this is fine. Yep. Yes. So you can see here the a chart where you can see the different canton. You can also learn about the flag of the different canton. You can see, for example, for an income of 500,000, you will be taxed in Geneva in the municipality of Colony at a rate of 30.8%. In the canton of Valais in Verbier, for example, it will be 32%. And in the Saint-Moritz, in the canton of Grison, it will be 25%. For maximal income tax, you can see that it amounts between 41 in the canton of Vaud % income tax rate and 28 in the canton of Grison. In Saint-Moritz, for example, for the wealth tax, this is the same. This is also a progressive tax rate, and we can see here for a wealth of 20 million, for example, the maximal wealth tax amount to 0.76% in Geneva and 0.26% in the canton of Grison. So you can see that we have significant differences for the tax rate, actually. Another point, we also have capital gain exemption on private assets. It means that, for example, if you sell your shares, the profit realized will be tax exempt in Switzerland. Another specific aspect is the partial taxation on dividend. If you own more than 10% of a company, if you receive a dividend from this company, the dividend, you will benefit from a discount of 30%. This is the partial taxation on dividend. So just prior to arrival in Switzerland, maybe it's fine to think about it and to maybe to have a restructuring of your wealth. For example, you can transfer some asset to, for instance, irrevocable and discretionary trust. Thus, when you arrive in Switzerland, this asset will not be included in your tax return, and you will not pay any taxes on that, since you are no more the owner of this asset. So maybe it's a thought to have prior to arrival in Switzerland.
Is the timing then of pre-arrival planning before you move? It's important to have your advice in play. What's the sort of time scale of which people undertake planning, such as the trust you're saying, and their arrival as a resident in Switzerland?
Yeah. Generally, it's better to do that 6 months prior the arrival in order to avoid the abuse qualification. It means if in October you transfer all your assets in a trust, and the 1st November you arrive in Switzerland, if the tax authority are aware about that, they will qualify maybe as abuse of law, and then we consider that these assets still belong to the taxpayer.
Are there do you see any trends in the types of client or the nationalities deciding to live in certain parts of Switzerland? I mean, I know anecdotally Brits like Verbier, for example, or is there anything that you tend to see just anecdotally with the clients that come through, or is it a genuine mixture and it just depends on their personal preference to the location?
Yeah, actually, it must be an effective tax domicile. So you will have to live there. So the first thing is to choose the canton. If you like the mountains, maybe you will go to Verbier. If you want an international city, maybe to Geneva. So that the first question, because it will be the effective tax domicile of the taxpayer. So he has to choose like that. So this is the framework for ordinary regime. So you have you must remember that you have an income tax and a wealth tax, that your worldwide asset and income have to be declared, and you benefit from some exemption. So like I said at the beginning, if you are foreign citizen, if you arrive in Switzerland for the first time, and if you not intend to engage in any gainful activity, you have an alternative, which is the lump sum taxation system. The lump sum taxation system, and I told you the requirement. And both, for example, for couples, both of spouses have to fulfill this requirement. It means if your wife is a Swiss citizen, you are not able to apply for the lump sum taxation. Both have to be foreign citizens and relocate in Switzerland for the first time. The taxable basis under the lump sum taxation, this is not the actual income and wealth of the taxpayer, as this would be the case under the ordinary regime. Actually, it will be based on a deemed income and wealth. So, in order to determine this deemed income and wealth, we will take the higher of 3 amounts. The first amount will be the total annual living expenses. It means that you have to fulfill a form where you put what is the expenses related to the standard of living, clothing, food, healthcare, and everything. This will be the first amount. The second amount will be 7 times the cost of accommodation. I.e., if you rent it, it will be the annual rent 7 times. And then the third amount will be the control calculation, which is calculated only on Swiss source income and asset. So the higher of these 3 amounts will be the taxable basis. That being said, we have also threshold for federal and cantonal level. For example, the taxable basis at federal level, the threshold is 435,000. In Geneva, it's 445,000. And in the canton of Valais, for example, it's 200. 50,000 the threshold at cantonal level. And then if you can see, I have another, yes, the other one, the other slide. This is the lump sum taxation threshold. It means the minimum that you have to pay. It's not the taxable basis here, it's the tax that you have to pay. For EU citizen, the minimum in Geneva, for example, it's 130. In the canton of Valais is 95,000, and this is for the minimum tax to be paid. For non-EU citizens, and this is important, you need, according to the law, you need to demonstrate a cantonal fiscal interest. Actually, you have to pay or to buy your permit, and that's why the threshold increased to 750,000. That's why here I have the other one for non-EU citizen with the threshold of 750,000. You can see that the minimum for a non-EU citizen is 250,000 Swiss franc taxes to be paid. So this is for the lump sum taxation. In Switzerland, we have roughly 7,000 taxpayers subject to the lump sum taxation. So it's not too many. Yeah, between 7,000 and 8,000. Just two last points. The social security until the taxpayer has reached 65 years old, he will have to contribute to the social security. The social security will be calculated according to the wealth of the taxpayer, or according to the taxable basis of the lump sum taxation. The maximal tax rate, the maximal social security amount is 25,000 per year. For example, with a lump sum basis, with a lump sum taxation, with a taxable basis of 450,000, the social security contribution will amount approx to 14,000 a year. This is social security. And last point, this is the gift and inheritance tax. In Switzerland, this is levied only at cantonal level, and it depends on the relationship between the donor and the beneficiary, and it could also depend on the regime. For example, depend on the taxation regime. For example, in Geneva, if you are under the ordinary tax regime, you will have no inheritance or gift tax between parents and children. If you are under lump sum taxation in Geneva, you will have 6% between the parent and the children. In the canton of Valais, for example, you have no gift tax nor inheritance tax between parent and children, regardless your tax regime. So it differs again between the cantons. So that's like I said, the first thing is to choose the canton of residence and look for a house, an apartment, and then contact the cantonal tax authority in order to discuss and negotiate the forfait and the taxable basis of the forfait.
Thank you.
And then also, and then it's and so on, the cantonal office of population as well for the permit.
Thank you. And could you just talk to us briefly about the political environment? I mean, from the UK, we read stories of referendums and change that might occur through that. Just on a high level, what's your take on likely future changes? What's the stability of the regime like?
Yeah, of course, lump sum taxation regime is regularly challenged by the left-wing parties. It means that, for example, in the canton of Zurich or Basel, they have abolished the lump sum taxation. And in the canton of Geneva and the canton of Vaud, they tighten the requirement and to put the threshold, and that's it. But now nothing is there is no referendum which are scheduled in order to abolish that. And we have to know that we have to be aware that in Switzerland, the key, one of the advantage to be in Switzerland is the political stability. It means that in order to change the tax law, for example, to abolish the lump sum tax regime, you need a referendum, then you need the implementation of the law, and then it takes several years. It's not from one day to the other one that it will change like in other countries. It takes several years, and you are able then you have sufficient time in order to adapt your position or your plan for the taxpayer.
Sebastien, just to bring you back in before I come to Daniel on the property side, talking about the stability of the political regime, is this something that you've seen as well close up in terms of the way decisions are made, the environment? You know, you're very close up with the various organisations that intersect with the key professions of Switzerland. What's your take on the stability of the regulatory environment and regime there?
I'm very optimistic about it, to be honest. I mean, I am talking I mean, especially in terms of legal services, which I'm very much involved in, and the provision of legal services cross-border between both nations. I speak to the British government, and I speak to the Swiss government, and within the negotiations of the future FTA, which hopefully will be signed in the near future, there's a clear adamant and insisting a mutual insistence that well, stability is what brings both nations together. So that's why I'm optimistic about it, because I think the idea by both governments is really to bring us closer in the various fields that we're trying to regulate.
Fantastic. Well, Daniel, in any relocation, getting the property right is a key part of any successful move. There's some specific terminology in the Swiss legal framework, Lex Collar, Lex Weber, different terminology that perhaps Brits or others haven't seen before. Perhaps you could help us demystify that to kick us off.
Thank you, David. I'll try to do so. Lex Collar and Lex Weber, I have to say, are two special animals under real estate Swiss law. These two federal laws apply simultaneously. They do not cover the same situation, but they often apply successively in a practical case. So first, the Lex Collar applies to a foreign non-resident involved in a real estate transaction in Switzerland. So if the foreign non-resident does not meet the condition of the Lex Collar, this can lead to block or prohibit a real estate transaction. A real estate transaction under the Lex Collar is any act enabling the transfer of rights on a real estate, including analog rights like lease agreement on a long term, for instance. The Lex Weber applies on its part both to Swiss and non-Swiss citizens. In communes or municipalities where more than 20% of the housing real estate consists of secondary homes, the creation, transformation, and purchase of new secondary homes is prohibited.
Is there more restrictions in certain areas? Is there this kind of legal framework applies across the country, or how does it work in different?
Yeah, absolutely. That's a good question. It can be different from a part of Switzerland to another. If you take, for instance, the Lex Weber, because it applies to secondary homes, it's much more impacting in touristical areas like you would have Valais, where you have Verbier, Crans-Montana, Zermatt. And of course, the threshold of 20% of secondary homes have been reached in most of these areas. So people need to adapt in order to get a flat or a chalet in this type of areas. And it has indeed led to some mergers between communes and municipalities in order for them to mitigate this impact and have more liberty or more flexibility towards this very low threshold.
Okay, so if we take a case of a high net worth client, he's done his tax advice, he's relocated into Switzerland on a residence permit, can they buy the primary residence freely? What about additional properties? What's the restrictions around how they can purchase provided they are resident?
Well, that's a very good question. Also, in relation to the coordination with Stefan and the tax people, because it's very much interconnected, and you need to take this into account because it's going to be taken into account for the calculation of your lump sum or thing like this. So, if we talk about the impact of lex scholar. First of all, Swiss citizens, of course, living outside of Switzerland are not subject to the lex scholar, just to make things very clear. Then foreign non-residents under the lex scholar are, of course, non-Swiss citizens living abroad, but the definition also applies to non-Swiss citizens residing in Switzerland that do not possess a corresponding residence permit depending on their nationality. So if they enter this definition of foreign non-residents, they can only, one, purchase properties that function as a commercial permanent establishment. So those are hotels, restaurants, offices, so of commercial nature, if you wish to summarize. Second, and I go back to your distinction between the areas in Switzerland. In cantons which allow it, like Valais, Vaud, Zurich, but not Geneva, they may be authorized to purchase secondary residencies if they have, of course, close ties to this area. The size limits, this is very often a question, are 200 square meters net living area, and this can go up to 250 square meter if you have a good lawyer, and or 1,000 square meter plot size, and again, it can go up to 1,500 square meter exceptionally. And then third scenario, in cantons which allow it, like Valais, Vaud, but not Zurich nor Geneva in this case, non-Swiss citizen may be authorized to purchase holidays home and apart hotels if the yearly quota is respected. So you have a quota divided in Switzerland between the canton and in specific tourist areas designated by the canton. Here again, you have a size limit. It's also 200 square meter net living area, up to 250, and 1,000 square meter plot size, and with the same exception and extension to 1,500 if you have special circumstances.
How does this impact the sort of luxury real estate markets in key locations? Does it mean that people need, for example, like a buying agent because it's a very tight market, there's not much supply, finding the right asset because of these restrictions makes a limitation, or?
You're totally right.
Yeah.
You cannot simply go on your website and try to find a good thing, because you can end up in a situation or in a transaction which at the end of the day you will not be able to execute. So it's if you take the example of Verbier or the Swiss Alps, which is of very much interest for the audience, you have in a sense two different markets. You have the one for foreigners and the one for locals. And of course, the pricing is totally different. But as well, it's of course much more expensive for foreigners, but it's much more liquid, because then you have access to a broader audience with very different standard in terms of purchase power and things like this. So it's much more interesting to have a secondary residence open to foreign acquisition.
And is the transaction very different in Switzerland versus, say, the UK conveyancing process of how you would buy luxury real estate, for example, in London? Is it a recognizable process, or is it something different? Or what's the surprises for people on the actual transaction, particularly for at the luxury high end?
But it's pretty different, because we have a lot of UK clients. We also have French clients, and in real estate, it's very specific to any countries. And I would even say in Switzerland, in every canton, where you have different practices for any notary involved in a transaction. So first of all, you need a notary in the canton where you're going to purchase the real estate, of course. And yes, the structure is different. And what makes some foreigners pretty uncomfortable is that when you sign a deed before a notary, you will have condition precedent very often to have the authorization of the lex scholar, the authorization of the lex Weber. So you need to have this type of processes in place, and it goes all together. And at the same time, very often people also to be in a position to purchase in Switzerland, they need to apply for a permit. So the reason for the permit is not very often the same than for a transaction where everyone wants to do it for the day before. So you need to explain how it works. You need to give comfort to the people, and this is where I think we can have an added value because we know the UK, we know other jurisdiction, and we are involved in this type of transaction, and we are used to this type of clientele, and we have a basis in the Swiss Alps at the same time.
And for relocators buying their primary residence, do they often use debt? Do they use a mortgage? I'll come to Vincent in a sec for a comment, but do you find people buy cash for property or they use leverage?
You have both. I remember of a story 2 years ago where we assisted the client purchasing a chalet in Zermatt on the 24th of December with full furniture because he wanted to be in. And I remember I did it with my in-house notary in Valais, and he did not understand why we would not have any mortgages on the plot. The person was purchasing 30 million cash, but then, of course, people take mortgages. They want to have leverage, and it's absolutely open to foreign people with assets. And of course, you get a mortgage in exchange for the bank as a security, as you will get in the UK. And so it's very interesting, especially in Switzerland. I don't want to interfere in Vincent's area of competence, but of course, our rates are really, really low compared to the Eurozone. So you can get money for 1%, 1.5% in Switzerland. So everyone gets leverage on it.
We're going to come to you for a deep dive on the financials, Vincent, but just briefly is there a comment around on the property finance? Do you find people are using leverage or like buying for cash and refinancing? What's the trend around the property purchase in the financials?
I would say it depends on the purchaser and on his financial surface. Yeah. People with a lot of money, so high net worth, they like to go direct and refinance afterwards. For standard and common people, I would say mortgage goes together, and then the notary is going to assist in of course having the mortgage duly registered, doing any discussion with the banks. Very often you also have an existing mortgage which you can transfer to the new owner. Good to know, because the value of a mortgage, even empty, is roughly 1% of the value of the face value of the mortgage. So the person selling is normally giving you for free the mortgage if you have good advice, or they would like to sell it to you. So normally you get it for free. You make sure the notary pays with the money on his account, pays back the bank. They register the bank, and they can bring this mortgage to the new bank doing the financing. So you need to be aware of this type of details in the transaction. Absolutely.
Thank you. And just finally, clients might be used to owning property through structures. What's the general advice around buying not in a personal name, but in a corporate or trust vehicle?
It's well, first of all, you can purchase in Switzerland through a trust, through a company, or through whatever vehicle you might want to use for tax efficiency, especially internationally. Then, of course, it has an impact in Switzerland on the tax treatment, because a company, of course, you can put debts, you can deduct charges, etc. But in relation to my topic of today, i.e. Lex Scholar, Lex Weber, so these restrictions on acquisition by foreigners in Switzerland, it has no impact, because they want to know who is the final beneficial owner. So if you believe you can set up a structure to circumvent Lex Collart, you are doing a big mistake. And you can be in a situation where your transaction can be considered as null and void. You can also be considered as somebody making a wrong statement toward a notary who is a public official, so that can lead to criminal offense. So this, my advice, I've seen many clients coming with a kind of solution with a structure that doesn't work, to be very clear.
Thank you very much, Daniel. Very clear, very interesting. Vincent, last but not least, to come to you. You've relocated numerous clients to Switzerland over the years. What do you find attracts them? What surprises them? What's in your long experience, what's it been?
Okay, I'll answer that question in 1 second, David. I'll just maybe complete the point of Daniel to come back to your question. So in Switzerland, for financing, if you're above 65 years old, which would be most of the cases for people relocating to Switzerland on the lump sum taxation, you're looking at having a loan-to-value ratio of 65% minimum. Now, if you have an affordability issue, that can be solved where you can raise a Lombard loan versus your liquid assets for the 35%, which would be considered as equity. And then you'd complete the transaction either with a second Lombard loan or you would do a mortgage. Typically a case we're looking at right now, we're doing a combination of both because my UK client has relocated in July last year, only received in his share purchase agreement the first 50% of the sale of his business. The second 50% is coming back in 2028, and he doesn't want to make use of his capital. And to come back on what Daniel said before, the Lombard loan is priced at 0.8%, including bank fees. So that is close to free money. And a mortgage, we're looking at between 0.95 to 1.2%. So that's the kind of rate someone can expect if he's looking. And to really answer your question, David, of what attracts, I think Switzerland is not going to be everyone's cup of tea. Is it perfect? No. But what I'd clearly say is that the 9 million people living in Switzerland enjoy today neutrality, political stability, and it creates a very predictable and stable environment for investors, free from geopolitical disruptions. And we follow the rule of law. If I compare to other locations, I think if not one of the most politically stable systems in the world, we've got 7 prime ministers who are proportionally representative of our various political parties in Swiss Parliament. So we have no bipartisanship, which is very stable as consensus must always be sought in Parliament, and it has been key in our nation for 700 years. One of the only direct democratic system in the world with the referendum system who forces people to think in a responsible way, which makes Swiss politics sound boring if we compare it to our neighbors, where it's much more Shakespearean, and the US these days. The Swiss franc is a globally recognized and safe haven currency. It's known for stability during economic and uncertainty and crisis. Switzerland also offers unmatched financial security, one of the only countries in the world enjoying a AAA rating. And just to give you a perspective, people with wealth are concerned of where they're relocating and will this country change? And come back to your question before, David. You look at the sanity of a country when you're looking at fiscal debt to GDP. And to give you a comparison, Switzerland's fiscal debt to GDP is 32.38%. And we are actually putting a brake on fiscal spending, which is unreal when you compare it to our neighbors, where Germany, seen as a very solid country, is at 74 and 85%. The UK is at 106. The US is at 128. In Italy, a comparison is at 140. So Switzerland has been reducing its debt to GDP since COVID. And our robust regulatory environment basically brings financial stability. I think it avoids unnecessary burden when it comes to wealth management industry. So it's a much lighter approach to regulation. I think Switzerland is very multicultural. We speak 4 languages, 67% Germans, 24% French, 8.5% Italians, and 0.5% Romanche, which we find in the Grisons Graubünden area. And I think the common denominator in Switzerland is that most, and if not everyone, speaks English. So even if I look at colleagues or clients living in Switzerland for decades, don't even speak one of our national languages, they get through everything pretty much in a very easily way. A very safe country. Ironically, one of the most armed nations in the world. But one of the most peaceful and classified in the top 10 safest countries in the world. When it comes to our medical system, I think we can praise one of the best medical systems in the world. In terms of wealth management, of course, it's #1 center for private client liquid assets, managing over north of US dollars 2.2 trillion. And businesses like Leovest typically manage around a quarter of that. And when it comes to wealth, I think given what we're reading in the press, especially in Europe over the last couple of years, I think it's a clear message to the world. Switzerland is welcoming wealth. We praise entrepreneurship. We celebrate people's success, business success, and like many people in government, for Swiss people, I often say to clients, the government works for us. We don't work for the government. And I think that's a very important message. And to come back to one of your questions before, I think a clear message also that the Swiss voters have sent in November in our referendum. We voted in November. The Left Young Socialist Party came with a referendum to basically apply an inheritance tax of 50% for any gift or any inheritance over 50 million. And out of 9 million people, that would have concerned only 2,500. That was rejected at 74.1%. So a clear message from Swiss people that wealth is very welcome. And then what I would say, because we're so central, it's one of the quickest hubs to London. Easy day trip. If you're on your day counting, you can be in and out. 22 flights a day, roughly, from Geneva to London. Zurich around has 19 flights. And either then we get maybe snowed in a day a year from Geneva or Zurich. If you're really unlucky, we never get fogged in. And what surprises most people really when you come here, it's how easy the process of the lump sum taxation negotiation is, how well Switzerland actually works. And actually, it's quite refreshing to move to a country where the government, again, is at the service of people. What shocks actually most people, and this is like I like to start in my discussions with prospects or clients, is the cost of living, because you have to look at how high the salaries are in this country. So I always use this example. My cleaning lady will make £4,000 a month, and my phone bill is going to be 100 Swiss francs, £80 a month, which is a normal thing in Switzerland, given our high level of salaries, but of course, very shocking for people coming with weaker currencies to relocate into Switzerland. So you have to put that in perspective when you relocate.
So do you find on the tax piece, I mean, we heard from Stefan, obviously there is a lot of complexity around the cantonal, the different rates, but do you find that people zone in on a solution quite quickly? So it's easy to understand once they look at their own circumstances and they get the right advisor, and they can quite quickly determine what the tax, how the tax regime will affect them. Unlike, I suppose, you contrast to the UK where we've had the non-dom regime, lots of technicality, lots of change. How do you find foreigners understand the tax rules once they've got advice?
So I always start by saying relocation should also be about happiness, not just tax. And of course, tax is a big factor in happiness for some people. So I think it comes about number crunching from a certain level of wealth. I would say 10 million Swiss franc. I'm talking about liquid assets now, not total wealth. It may make sense to come on the lump sum taxation basis to potentially move on the ordinary taxation basis or stick there. I think it also comes to weather. Where do you want to live? Because you think London's miserable in the winter, but Geneva and Zurich can be pretty miserable when it comes to weather. So a lot of people relocating here, coming back to the cantons that Stefan mentioned earlier. People go to Berne, where you have Gstaad, or Canton Valais, where you have Verbier, Crans-Montana, Zermatt, Saas-Fee, some of the largest ski areas in the world, where you'd be in the sun 300 days a year, typically. So I think it's a combination of lifestyle, weather, and I think personal needs. If people got to be in and out of the country, need to be mobile, fly. I think a big message is Switzerland's a very small country, so you've been in the airport within 2 hours. So I think it's a combination of factors, and of course schools are very important, and then it's a question of a language. Also, some people will fancy being on the French part or on the Swiss Italian part because they'll be quickly in Italy. So it's a very central location, and makes it very easy for people to relocate to.
And in terms of finding property, if they're very specific on the type of property, what's your experience around? Do people move or make numerous trips to try and find areas, or rent and find something, or is there any trends around how people make the transition, which can be complicated?
Yes, well, I think we're very much here to assist people, and accommodation is really the first question. And I would really say it depends where the person's coming from. So if we're going to take the UK, where UK residents have a very property-minded angle, I try to discourage people to buy as a start. I think that's a big mistake when you relocate, is to buy, because once you got the B permit, you actually have options to get a hand of the two markets Daniel was referring to before. I think having the right contacts is key, and finding an accommodation is actually not that difficult if you have the right people and you're speaking to the people who understand the context of the relocatee, what they want to achieve, and where they're relocating to. So I think it's very much about network. And then, of course, if you're buying or you're renting first, and what you actually, the type of, let's say, quality of accommodation you're looking for. Switzerland has a very high standard of construction. So again, everyone's going to look at it from a different angle, depending on their needs.
And then from the asset management perspective, when the client makes a move to Switzerland, how does that impact the way they look at their portfolio, or how they manage the money?
Yes, so I think at EOS, we have a fiscal efficient approach to portfolio management in general, the people relocating to Switzerland or not. So I think what is key is to understand if they're relocating to Switzerland, if they're coming on the lump sum taxation or the ordinary taxation system. We're going to be very careful about Swiss situs asset, depending on the tax regime. It's very much so when people are actually leaving, typically the UK, where it's very important to work as a team with the tax advisor in the UK to advise on a pre-departure, and then on arrival with the Swiss tax advisor. So I think the portfolio will really be a discussion around, time horizon, risks, etc. But the fiscal approach is very important, not to jeopardize the lump sum taxation, or to put typically a UK client that still is filing a UK tax return, typically try to avoid UK situs assets, so they can try to reduce their exposure to the UK inheritance tax. For the people who've left the UK to Switzerland, the two scenarios I've seen typically are we have a lot right now, entrepreneurs selling their businesses, so they will take a footprint in Switzerland before the share purchase agreement is signed. And at that point in time, what's very important is that we have very nicely structured in a disciplined way the departure. So those people will come typically for 5-6 years, and then eventually we'll go back to the UK. If it's IHT, now with a 10-year tail, it will be a different approach. And then we'll really even be more focused on avoiding UK situs assets and Swiss situs assets when it comes to the lump sum taxation regime.
So we're just coming in on the end of the session. I was just going to ask a couple of questions just to open it up to the rest of the floor as well. Is Stefan, I was just going to come to you to ask about, can you relocate to Switzerland while maintaining business operations elsewhere? So many clients be active entrepreneurs. What's the limitations on the tax front for business people active in business?
Yeah, actually, the limitation, you do not have to carry out an activity in Switzerland. So if you are under the lump sum taxation, you are not able to work in Switzerland. An activity, actually, a gainful activity is tolerated, but the taxpayer under the lump sum regime, but the taxpayer have to demonstrate that the work is performed abroad. So that's why. But if you are under the lump sum taxation and you intend to open a business in Switzerland and to work in Switzerland, you will automatically have the ordinary tax regime.
Okay, thank you. And Sebastien, just to bring you in, I mean, the hedge fund community in Switzerland is very well developed. With changes in the UK, there's expectations that people might be leaving. So for financial services market professionals who want to continue in their business, is that what's the kind of environment do they find? Can people go and set up base in Switzerland to go and expand their financial services business in certain niche areas?
Well, yes and no. That, or I'll give you a lawyer's response, and I'll say it depends. The what's important to keep in mind when you're talking about, and specifically the BFSA, is that it streamlines the cross-border provision of services, as we know. So the UK advisors can now come to Switzerland. They can travel to Switzerland on a temporary basis see their clients, advise, go back. Now, it wouldn't, the advantages of the PFSA would not apply to anyone or any firm, UK firm in this instance, setting up a branch in Switzerland. Then we fall into local legislation provisions and conditions. So that I think that's something that we have to distinguish.
As always, tailored advice is needed, but there is an opportunity there, isn't there? And there is an ecosystem that plays well. Daniel, just as we come to the end of this, what's your top tip for those looking at the lovely Swiss properties that they'd like to own in the mountains or in the city? What's the top tip you'd like to leave potential relocators thinking about?
Well, I was very enthusiastic about purchasing a property, and then Vincent said it would be better to wait a little bit. So maybe there is a mix in between, and let's say to like Sebastien, that it depends. But there are opportunities. It's a really nice market, ultra strong in terms of real estate, very robust. So I think it is on the top of having a good currency, sustaining it. I think it's a good investment on the top of the pleasure of living there.
Fantastic. Vincent, just as a closing thought on this webinar, we've heard some really interesting facts, and I'm grateful to you all for your contribution. What would you leave the audience with as we wrap up this webinar?
Well, I would say come to Switzerland, rent first, call Daniel, buy a property, and we'll look after you.
Fantastic.
Sure.
Well, look, thank you so much for joining me for this session, and we look forward to sharing it. But I wish you a very nice afternoon. Thank you.
Thank you,
Thank
David.
you very much.